In this video, I'm going to tell you why I recently invested $1 million into Chainlink, the Link token, and why I believe that within the next 5 to 6 years, we will see the price of Link be at $1,000 with a total fully diluted valuation of $1 trillion. I know you guys think that is absolutely crazy, but make sure that you watch this entire video from front to back because I'm going to go into all the evidence that I dug through for the past week or two in painstaking detail to come up with a high conviction play, which is incredibly low risk with incredibly high reward. And all the evidence to back this up. And at the very end, guys, I go into an Excel sheet with all the data and links that you can go do your own research to see if you come up with the same conclusion that I did. So if that sounds good, guys, make sure you like the video. My name is Kyle Chasse. I've been in crypto for 12 years. I have a massive portfolio, and I look for high conviction plays. So subscribe to the channel if you're not already, because I bring the best alpha to you guys. Let's get into this video. I believe that this is a pretty accurate post here by Tommy Mustache, talking about protocols that have changed the world. TCIP, World Wide Web, and Chainlink CCIP protocol. Now, I believe here that we can see Chainlink at $1,000 per link, and I know that that sounds absolutely insane to you guys, right? It's 131x from here, and in this video, we're going to develop all of the kind of evidence that led me to this thesis of why I'm so bullish on Link and why I believe as a blue chip cryptocurrency, it has the best risk to reward ratio in the entire market. Before, I would have told you it's Bitcoin and Ethereum, lowest risk, highest reward. But Chainlink has something that a lot of other blue chips don't have. Let's talk about other layer 1 and layer 2 protocols. There's a lot of competition. There's a lot of competition in the DeFi space. There's a lot of competition in the GameFi space and all these other spaces. And in those spaces, yes, a lot of those will do crazy multiples. But the liquidity and the capital inflows will be spread through a lot of different high quality technologies. But when it comes to middleware solutions like Link, what Link is doing is unparalleled, and they essentially have a monopoly on the space right now, and there's nobody even close to touching what these guys have been doing. So you can see in the past 30 days, the only thing that has outperformed Link, and you can see that Link has done 23%, Bitcoin 0.7%, ETH negative 3.82%, and Telegram's TON or X-Telegram TON, I did a video on that recently. Guys, go back and check it out if you're interested, at almost 50%. This one is interesting. Again, I've gone into the reasons why I'm bullish on Telegram technology from a user adoption perspective. Go check that video if you're interested. It's very, very useful. So upcoming is this Smartcon conference. This is with Sergey as one of the main speakers, alongside other powerhouse people like Eric from Google, Lawrence from Google. You've got Quan Jiang from Swift, and you can see other Chainlink is very prominent here in this major financial conference with people like State Street, which is I think one of the third largest asset manager in the world. You've got other guys from Swift, and Coinbase, Euroclear, which is also someone that uses a big clearinghouse that uses Swift as well. And you can see right now, there's some speculation that there might be a good buying opportunity. And guys, I just came in right now at, right around this price for Chainlink. Now, like I said, I deployed $1 million into it, and that was a big decision I had to do, selling some of my Bitcoin and Ethereum. And that might not be it. I might look for a better opportunity to come into this, but I'm just bullish in this conviction. And if you see over the long-term horizon, over the past 180 days, the lowest has gone is $5. So could we see another pullback to $5? Yeah, maybe possibly. And so you have a better buying opportunity than here. And if that happens, or even if it goes back to $6, I'm going to be buying even more. But if you look at the 1 year timeline, right, even through the worst of the worst, it still hasn't dropped below $5. And if you look at the max time frame, we've gotten all the way up to over a $50 link, right? The max was $52. But this is really exciting, guys. This is huge, and a lot of people just aren't ready for this. Retail aren't here, and the massive institutions have only been trialing this out, and so you haven't even got opportunity where they've been buying in the masses yet. But we're going to tell a story now about the actual value accrual in the Link token and how the economics work. But let's go and talk about the SIBOS conference that recently happened. Check this out.
It's been an amazing 4 days here in Toronto at SIBOS. We've met with well over 60 banks, financial market infrastructure providers, and potential partners.
This year, we've executed on our massive successful pilot with Swift and 12 other financial institutions that are here at the conference. And this has afforded us just great social proof of working with a great partner with Swift. And a lot of these financial institutions are looking at what we did in that pilot and seeing how CCIP can connect and allow assets to travel to different blockchains.
The industry is ready for tokenization. They also recognize the fact that CCIP is the most secure way in which they can perform that. They can actually move their assets from Web 2 to Web 3.
The demand for CCIP is palpable.
These institutions are realizing for these ecosystems to work, you need CCIP to connect all of these different workflows to make capital markets work in a more efficient way.
So let's take a look at this this tweet from Sergey, who is the CEO and co-founder of Chainlink. This year's SIBOS conference proved to me that the desire and the demand for the financial institutions to integrate blockchain technology is not only real, but here right now. After speaking to many of the largest central banks and private banks and financial market infrastructures, central securities depositories, and more, it has never been more clear to me that the global financial ecosystem is moving into an on-chain format at accelerating pace. But there's 3 key challenges financial institutions will face: connecting their existing systems to blockchains, transacting with tokenized assets and any public or private blockchain, keeping all of those tokens updated with critical data as they move across chains. Right now, there's only one possible solution that actually allows all this to happen. Let's give Sergey a follow. Let's before we get into what Sergey has to say, this is a flashback for 2016 SIBOS, when Sergey was also speaking there, saying the real decision corporate folks have: is this a sustaining innovation or a disrupting innovation? In either case, the sound investment is getting your systems ready and cryptographically connected to these networks. That was SIBOS 2016, and SIBOS 2023. These systems are now ready. So this is another reason why I'm so bullish on Chainlink, because Sergey and the Chainlink team have been thinking about these and building these for a long time. I believe Chainlink was founded in 2014, and building the name Chainlink was a brilliant name, right? First, you had the Oracle solutions, which gave all price data and data from the real world on chain. So you need a way for DeFi and games and things like that to work. Betting, marketplaces, casinos, whatever. You need to be able to pull data from real world events in a decentralized way that's trustless, that can come on chain, so these DeFi applications can actually work. So now let's have a listen to Sergey, and this is really, really, really critical, guys.
So there used to be this whole theory that I'm a bank and I'm so big and important that I'm going to have my own chain and that's going to be it. I'm just going to use that one chain and everyone's going to come to my chain and be with me on my chain. Now banks are realizing that that's not realistic. And what's actually going to happen is that going to be hundreds of different chains. Every bank is going to have its own chain. And in order to transact with that bank, with the other bank, you're going to need to connect to that chain. If you don't connect to banks, if you don't connect to counterparties on their chain, then you won't have clients, you won't have users, you won't have liquidity, you won't have markets. If there are no markets, there's no point of making your assets. So while the first step might be making the market by creating the asset, the next step is getting liquidity, is getting value to flow into your asset by connecting it to multiple chains. And I think banks have realized this, as have the CSDs, the asset managers, various other market infrastructures, and this idea that you won't reach this state of either your own chain having all the users come to you or some magical global chain that all the banks are going to be on simultaneously. This idea going away makes it clear that something like CCIP is absolutely critical. And I think we're by far the farthest bridge technology and connectivity technology both into chains and across chains. And I think banks see that thanks to our work with Swift and DTCC and Euroclear and all the participants in the recent POC. The report we put out with them, I think, was also very helpful. And we have a lot more going on with a lot of the people in that report.
And so this is another reason why I'm willing to take the bet and converting some of my ETH, a lot of it actually, into Chainlink, because as more and more, so there, yeah, like Sergey said, used to be this narrative that only one or two chains may win. But now that we realize, look at Ethereum layer 2, for example, and the layer 3s that are being built on top of things like Arbitrum, ZK Sync, Polygon, all of these institutions will have their own chains because they have different requirements. They need privacy, they need different economic models and conditions. They want some things to be private while other things are public, but all that being provable with zero knowledge technology. So all of these, everyone will have their own chains. Big popular applications will have their own chains, like app chains. And I was really, really bullish, if you guys know me for a long time, on Polkadot before, because of the narrative of interoperability and what that was doing. But now when we have CCIP is the same kind of thing that made me so bullish on what Polkadot was doing before. Now, for all of the chains, right? Not just a Polkadot network, but mostly starting with Ethereum-based chains, Ethereum layer 1s, layer 2s, layer 3s, connecting all of them and eventually stemming out to other alt layer 1s, connecting them, even private chains that banks will be creating. This is huge. And CCIP is really, the oracles was great, right? But the real revenue generating thing, the thing that's going to make Chainlink absolutely massive is CCIP. So what is CCIP, guys? CCIP is the cross-chain interoperability protocol. This allows things like value and messages to seamlessly be transacted throughout different blockchains, from private chains to public chains and vice versa, or public to public or private to private, it doesn't matter. And this is really, really critical. It is that interoperability piece that everyone talks about, but Chainlink has a way to not only theoretically figure it out, but it's actually live right now. So you see that these are all these different use cases for CCIP, but high level, that's exactly what CCIP was here for. Let's just check this out real quick. It's actually available on mainnet. And the reason that this was brought to my attention, CCIP, is because we're building, if you guys don't know, we're building different companies in the space. We have Pay Network, we have Commonwealth, Fluid. And when my developers told me that some of the things that we're trying to do would only be possible when CCIP launched, it made me look into more about what is CCIP and why is it so important to what we're building. And in our particular situation for Commonwealth, we really needed it because the Commonwealth NFTs are minted on Ethereum, but they need to communicate to the Commonwealth protocol, which is being built on ZK Sync. And so in order for them to work seamlessly together right now, for that communication to happen, but it would take 20, 30 minutes, and nobody's willing to wait for that. It makes it completely unusable from a user experience perspective. But with CCIP enabled, that communication can happen in a matter of seconds and makes everything really usable. So you can have something like an NFT that works within an ecosystem. You can have that in another part of your app that's built on a different blockchain, for example, right? NFTs on Ethereum, protocol on ZK Sync, and have seamless communication between those two protocols. Let's get into, now we're going to start to talk about a little bit about, we're going to get into the narrative of why this is so valuable and the price prediction at the end of a little bit of data to back it up, right? And so you have financial services, DeFi, gaming, NFT collectibles, climate markets, enterprise, and insurance are all things that can be solved with Chainlink. And you know that there's a lot there's also different things that Chainlink has, like verifiable random function, the price oracles, and other things as well that all feed into the revenue of what Chainlink is doing, right? And I think these are really interesting facts as well. Tokenization. So we're talking about real world assets. You'll hear that time and time again. It's a narrative that was discussed a long time ago, right? People are talking about putting real estate and fractionalizing ownership of real estate on chain, but this is something that is now becoming more and more possible because The infrastructure just wasn't there before, but now with CCIP, it is. So let's look at some of these staggering statistics. $867 trillion in assets. This is from World Economic Forum. Tokenization is a multi-$100 trillion opportunity for early adopters. Think about that for a second. Massive. 97% surveyed agree that institutional investors agree that tokenization will revolutionize asset management. As I said before, time and time again, anything that can be tokenized and should be tokenized will be tokenized. Equities, bonds, treasuries, real estate, assets, precious metals, whatever, will be tokenized, put on chain, and those will be on different chains with liquidity in different places. And without something like CCIP, it all becomes fragmented. And of course, making the markets 24/7, 365 is incredibly important. No more of this Monday through Friday, 9 to 5 markets being open. Markets will be open 24/7, 365. And BlackRock says the tokenization of asset classes offers the prospect of driving efficiencies in capital markets, shortening value chains, and improving cost and access for investors. So here we go. We have only Chris Barrett, who's also building Chainlink as well, says only Chainlink CCIP achieves the full 5 levels of cross-chain security and decentralization that financial institutions are likely to need for safely managing quadrillions of dollars of assets in asset flow and bringing global markets on chain. So there was this partnership that was done with Swift, and this is getting into the price prediction that we're going to go into and why we believe that it could actually hit $1,000 backed up with data. So we get into this partnership with Swift, and Swift does $3 to $5 trillion a day in value being transacted on the Swift network. Now, when you talk about something like CCIP being able to facilitate transactions, their revenue model is based off of percentage of value or a rake that gets taken from the volume that Chainlink is helping to process. So imagine that this, and they've been working with, Chainlink has been working with Swift for 5 years on these trials and proof of concepts. Now it looks like it's moving into the real thing. So imagine if a portion of that was captured, the portion of that value is captured by Chainlink and being redistributed in the token economy and stakers as well, because we do know that stakers of Link now are getting a portion of the revenue being generated. This goes back to revenue share, something we've been talking a lot about on this channel, revenue share to the token holders and token stakers being a really critical aspect of the way that token economics work moving forward. So there's an interview going into it, at the SIBOS Conference where ANZ, a $1 trillion asset manager out of Australia, did a sample run with CCIP and Chainlink, where they did their Australian stablecoin that worked with some sort of carbon credits for the Great Barrier Reef as a sample test. And this is another good post by Ilo. To my knowledge, Chainlink CCIP is the only real solution for financial institutions to utilize blockchain technology with their current infrastructure, and that is key. So Sergey goes into on an interview talking about the fact that this is key, right? That Chainlink was built in a way that can integrate with the infrastructure of banks and financial institutions without them having to make major modifications. This is the best thing ever, right? These guys do not want to have to build things. This is why Chainlink will have such a huge percentage of market share, if not a complete monopoly, because they built things with this in mind of how to go easily get institutional adoption. So Chainlink God is a really great resource for all things Chainlink. Suggest that you go follow him. When people think about tokenized assets, they think of the trillions of dollars worth of assets in the global financial system that can be converted into on-chain format. But what many people don't realize is that tokenization will grow the financial sector exponentially thanks to the creation of deeply liquid and global markets for previously illiquid assets. Not to mention increased access to global investor pool of capital, including people who have historically not had access to financial services, billions of people. So furthermore, entirely new categories of financial assets will be born into existence thanks to the unique properties of tokenization. These are future asset classes we can't even imagine today, similar to thinking about the future of the internet use cases in the 90s. Trillions is the floor, not the ceiling, right? We're talking about quadrillions of dollars of value that can be processed through Chainlink. This is why I am so bullish on what's going on, guys. Let's listen to this.
I think these types of assets are new assets coming into the financial industry. And new assets are actually easier to turn into blockchain-based token assets and tokenized real-world assets. So I think that's one of the reasons they went with that, because there isn't an accepted framework or an accepted standard for how to do that. There is real demand now. Real-world asset tokenization is something that banks are uniquely positioned to do because they know how to package things into financial products very well. And they have access to huge amounts of various industries and corporations that want to package their assets into real-world assets, right, into real-world tokenized assets. Then CCIP, I think, is a critical component of providing liquidity and creating viable real markets for those assets made by banks. The other great thing about CCIP is there is no chain. So a lot of the solutions that seek or want to create interoperability across capital markets and banks, what they're actually doing is they're injecting a chain in between banks, which will essentially act like settlement infrastructure. And banks do not need more settlement infrastructure in between them and their counterparties. It's just not something they're excited to do. A, there's a lot of settlement infrastructure already, and they're making their own chains for that purpose. And B, they kind of view it as a cost that they don't want or need. What they actually want is they want more usership, more liquidity, and they want to connect to their existing counterparties efficiently. And that's what CCIP is meant to do. CCIP doesn't have a chain. CCIP doesn't have any way to do settlement. It's just a way for one chain to send value or tokens to another chain together with a message that can trigger outcomes in that chain.
So as you can see, guys, this is absolutely massive and is right. Like what we saw JP Morgan, who thought that they could create their JP Morgan coin, right? And banks, institutions, they're competitive. They're competing against each other. They don't want to use infrastructure created by one another. They need a neutral third party that's decentralized, that's trustless, to be able to allow all these things to happen. They cannot trust each other natively, right? You need a trustless, cryptographically secure network that will transfer all these messages and value, that nobody needs to trust any central counterparty, right? This is the beauty of decentralization. This is the massive, massive use case that is actually about to be adopted, guys. This is going to be massive. I can't even stress this enough of why I've decided to go so heavily into Link. I mean, I've had Link before, right? But now as just kind of something that I knew was a blue chip, right? But now making a big decision to convert something like Bitcoin, which I thought I would never sell, or Ethereum, which I always just wanted to stack the two of them, and convert a large, because I do think that this has a huge upside potential. So let's get into the kind of price prediction aspect of this. Now, again, so there's two ways. So one is what we looked at here was comparing if it just captures some of the value. We know that it's likely that Swift will use Chainlink. In fact, Swift has to use Chainlink, because if they don't, they're going to be obsolete. Right now, it takes 2 to 7 days to settle on the Swift network from bank to bank. But with CCIP and Chainlink, they can make that settlement happen in minutes rather than days. So if Swift wants to survive and not have to do massive innovation and greatly change what they're doing, they must use Chainlink, CCIP. They must use it. So now let's take a look. So what we did, this is a basic high-level valuation of what the potential is for the price of Link. Now, this is not financial advice. Do your own research. I'm just telling you what I have done and what I used as my own kind of guide to see what the potential value of Link is in, let's say, 2030. This is not short-term, guys. I'm not talking about the next month or year or 2 years, but in 2030, I genuinely believe this is a reasonable assumption, taking a look at the top 5 companies in the planet, how much revenue they generate: Apple, Microsoft, Saudi Aramco, Alphabet, and Amazon. You can see that Microsoft generating $212 billion a year is valued number 2 in the world at 2.35 trillion. So for what I'm making the assumption is if I say $1,000 Link, that means Link will have a $1 trillion fully diluted valuation. Now let's get into why this is possible. So if Swift transacts $5 trillion per day, that is $1.825 quadrillion a year. Now let's make an assumption that if just 1% of that is captured by CCIP, that is $50 billion of volume a day being processed by CCIP. Now, that $50 of volume would, with 1% fee generation, the 1% of the volume, with 0.25% fee generation would be $125 million a day of fees being generated, revenue being generated a day by CCIP. Now, there's some articles I read and some research reports, and I'll put down in the description below a link to a couple of different reports if you guys want to dig in deeper and see a different valuation. In fact, these two tabs over here were done from a research report that I'll put in the description below. But the interesting thing is that the valuation that I came up with is very, very similar to this valuation created by a very reputable VC who does very traditional types of modeling. And you can see that, again, down below. I'm not going to go into in depth, but they came up with essentially the same price that I came up with here in my modeling. So if you look at, different percentage of volume that could, and why I think this is real, like we're saying that like Swift only processes fiat currency back and forth between different banks and countries. But tokenization is more than just fiat. It is global equities. It's everything that we talked about before, which is greatly it can do fiat and do all these other things as well, which makes it an even bigger total addressable market than Swift alone or fiat currencies alone. So that's why we're just using this Swift as a marker. And even if it started doing 5% of the volume of what Swift is doing, that'd be $250 billion a day of volume, and at just a low fee. And Swift charges 3 to 5%. So if you want to send money from A to Z, bank A to bank B or Z, whatever, they're going to charge you 3 to 5% using the Swift network, and it takes that 3 to 5 days or whatever. But using CCIP, you can get that time down to just a matter of minutes, and it would make sense that their fees, because it's more efficient, and there's much less overhead in running a decentralized protocol than there is a huge banking institution with all kinds of employees and manual effort, labor. So the revenue is almost nearly all profit. But so you can reduce those fees from 3 to 5% down to just 0.25%. Or in the research report that will be linked in the description, they're actually using in their research 2.5% fees per transaction. So looking at these numbers, if it's just 1%, it's $1.25 billion a day, or if it's 2%, we're looking at $2.5 billion a day. But let's look at these annualized revenue. So for fee generation at 1%, if it's the fees are only 0.25%, it's $45 billion annually. But if you look at what the research report says, 2.5% fees, that's $456 billion a year at just 1% of Swiss volume, which would put it in the third position here to make it a top 3 revenue earner in the entire world of any company. So guys, I will link this spreadsheet down below so you can look at it yourself. And it has some of these different assumptions and models that are more sophisticated than I did from the researcher down below. And you guys can just look through this with your own information, do your own research, make up your own mind, your own decision. But I hope that I outlined why I'm so bullish, guys, why I decided to make a huge investment into Chainlink, why I am now a mega bull, and probably aside from Bitcoin and Ethereum, I would say right now there's 3, that Bitcoin, Ethereum, and Chainlink are the things that I would say are solidified to be some of the biggest valuations in the entire world. Remember, they're global, not national. And I think that the biggest upside right now is Link. This report has it at 131x. I think to $1 trillion is slightly more. And again, that's over the next 6-7 years, guys, right? But still, think about it, right? You put $10,000 into Link right now, that turns into, something like 1.3 million. You put $100,000, that's like, $13 million, right? $1 million, $131 million. So guys, that's going to do it for today. I hope that you found it very, very valuable. Share with everybody that you care about. It's exciting right now. It's exciting because you have an opportunity with something that has so much adoption. It's a really serious project with very little to almost no competition. It's proved itself as an essential part of infrastructure of finance moving forward, not just in Web3, but on a global, traditional financial. This is another thing that's absolutely extraordinary about this. It is proving incredibly valuable. In fact, it is almost priceless to the traditional financial world. There's nothing like this out there in the crypto market now. Make sure you share with your friends and family and everyone you care about, guys. Like the video if you haven't already. Subscribe to the channel if you're not already. I will catch you guys on the next one. See ya.